Yo, what's good, YouTube? This is my third time recording this shit, and I just keep getting interrupted. So I'm just gonna pretty much go through it as quick as possible. So it's gonna be a short video, but pretty much at open, we had a 9:30 a.m. opening range. We had a 98 handle range opening range gap, and that's what I was trading off of today. This big range gap. I didn't trade until 10 a.m. because we had a 10 a.m. red folder, and I just wasn't going to trade up until then because it was probably going to be manipulated like this. You might want to go long and then it goes down for no reason whatsoever. We had the first presentation here, but I was not worried about this. I was not watching price during this time up until 10 a.m. or like 9:50 a.m. So what I noticed at that time was that we had this order block that was being respected. It came in here, it tapped in here, and it tapped in there. So my first trade, my stop was placed here. I could have moved my stop up here, but that's just too much risk that I'm not comfortable with, I guess. For my model, I don't risk too much. I take more losses than I win, but when I win, they're runners. And in today's market, that highlighted that pretty intensely. I took like 5 trades or 6 trades today, and one outweighed all of them. Essentially, and left me with more. But yeah, so I got out pretty early here. I think it was like a $20 loss. And you can see I entered right here off the order block. And then we came up in here and we got stopped out at this fair value gap high. But it never violated this level. I wasn't expecting it to violate this level, but I wasn't going to risk that much either. So I come down here, we come into the 10:25 a.m. to 10:35 a.m. macro. I usually see runs run through here. I'm not sure if ICT talks about this macro in particular, but this is a macro I like to use based off of how I've been watching price for like the past 4 months already. But yeah, this macro is pretty nice. I usually deliver some nice setups from here. So yeah, I tried getting in here off of this, and it's a fair value gap, as you can see, with the volume imbalance. So you couple that together, and then yeah, we went up here and we got stopped out here. So we tried to go long here, and then we went down here, and then we got stopped out. That's because I was moving my stop to break even, actually. So I moved my stop to break even. I tried to get in here off of this reaction, go up. I was targeting the highs up here, but it didn't ever get to that point. At least I moved it to break even though. So I had moved it to break even, got stopped out break even. So as you can see right here and right here, we also have this trade here. I got stopped out pretty high. So this was like another $15 loss, I believe. So 20, 15, that's 35. This one was break even. And then this trade that I took in the 10:50 a.m. macro, I was watching this here. This fair value gap. I was expecting this to be left open. Why was I expecting it to be left open? Because we had this breaker on the top level. And what is a breaker? This, a run on stop rates, which is right here, which means when price trades back up to here, this level here, this specific level here, we can expect people to sell off their positions here. Or yeah, it would be selling off their positions because they went long, they went into drawdown, and now they're looking for the opportunity to get out of their positions here. So as you can see right here, it delivers straight down here. And this was a move of the day that I caught. It was from here, this point on. I expected this to be left open. Traded into it a little bit, but that was okay. Came right down here during the 11 a.m. macro, and we got out at our target, which was a low or close to the low of the opening range fill. And there was a sell side liquidity target. It was equal lows down here, or let's see if we can see it back here. Right here, I was aiming for that. It's actually, I actually got that point from a higher time frame on the 5-minute, but yeah, that was my target. Boom, hits my target, and then I try to get it in one more time off of this breaker right here. I thought it'd be long right here. It'd be like a little clean long, but yeah, it didn't end up going my way on this one. And then after that, that was my last trade. And after that, price started ranging up and down. And then for the rest of the session, it was doing this whole consolidation thing again. But yeah, guys, that was just my quick review on my trade for today. It was a profitable trade day. Always good, but you can't be happy about them all the time, man. Like, being happy about them is just gonna make you emotional when you lose as well. And it's completely normal to be emotional or whatever when you have these things, but I'm practicing trying not to be emotional at all about my winners or my losers. I don't want my winners to affect my emotions. I don't. Because if my winners make me feel good, I'm not gonna feel good when I'm not winning. And that's problematic in your everyday life, and you know, your trading, the way you trade, even the way you take a position, it's all gonna affect you one way or another. So I try not to be too emotionally tied to these nice clean days where I catch a nice move. I just, it's fruit of my labor to be able to do stuff like this. But yeah, guys, this is still just me paper trading, still practicing, still showing up to the market every day. Not real money yet. But as soon as I do start doing that real money, these titles are going to change, and hopefully my page will get some more traction. But other than that, if you're watching this, leave a like, subscribe, and you guys have a blessed day.